Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your hosts Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin, Dennis Dick with you. This morning, we're going to talk about the continued rotation the other way. We were talking about the rotation from growth to value for a couple of days there. That kind of came off yesterday. Well, not kind of. It did come off yesterday. So we'll talk about that rotation and what you should do now if you're looking at some of these growth, some of these value names, some of these beaten down names. We've got some earnings on our radar. Two guests on our docket today. First up is Marc Chaikin. He'll be on with us at 8:15. He is the founder of Chaikin Analytics, longtime market veteran. And then at 9, we'll be joined by a new guest, Jim Barr. He is the CEO of Nautilus, ticker NLS. We're going to talk about trends in fitness industry, what's changed for them this year and what they see going forward. Before I throw it to Joel, I want to remind you all to hit that like button, hit the subscribe button, show us some love. We appreciate that. Joel, how are we doing here overnight? Seems like a quiet session this morning.
Kind of, not really. You opened up right at the high of the pre-market. You didn't know it was going to be high, but you opened up near the high of the day yesterday at 76.75. Then you sold off all the way to 38 and a quarter. Then you came all the way back, almost to scratch. I think you did get back to 35.68, and now you're 20 points after that, off that. So an undecided market. We'll be talking about that more with Triple D when we come on. 41.20, the last print in crude, that's down 27 cents. Gold trying to get off the mat. That's up 570 at 1867.20. Silver, that's down 4.7 cents and making 5.7 at 24.21. And Bitcoin bulls are at it again. Now we're near 16,000, missing it by only $50. We're up $145 at 15,950. And before we get things started, bringing Triple D, can I make a really bad joke, Spencer?
You sure? What do you got?
I'm scared.
I'm
actually very scared.
What do you got?
I think Marc Chaikin should start a marijuana product, a newsletter.
Why?
Okay, why?
Bacon with Chaikin.
I actually laughed on that.
All right, that wasn't that bad.
Okay, Marc, that was a good one, actually. But okay, I was actually scared when he says, a bad joke from Joel could be bad, but that was actually pretty good. I like that bacon with Chaikin. I'm going to say that. We're baking with Marc Chaikin next week, I think. So
no, today.
Was it today?
Yeah.
Oh, awesome. I thought it was next week. Oh, great. So we're gonna open with that. You gotta ask him that. You should save that for him. He would have liked that.
I had to run it by
Oh, yeah, you're too excited.
Yeah, it just came to me.
I think you can. It just came to me. like these value stocks are just coming to us here now.
Oh, yeah, we had good debate.
Yeah, you know what? It was a good pre-market show. Just when we start, when we say the pre-market show, we start 10 minutes early. We just kind of talk about what we're going to talk about.
We start 15 minutes,
and then we start getting fights on the pre-market show. So Joel, you start it. We'll just replay it here, but you start. You know what your thesis was here. And I just want to get into
it's more facts than thesis.
Facts. Joel's got the facts. Just the facts, kid.
We're seeing rising cases, right? And we're breaking records, right? But we're getting back up to levels where we were in March and April, right? To break these records. But back then, it was just concentrated in Michigan, New York, New Jersey, California, right? The big population areas. So now the exponential factor, if it kicks into gear, could be off the charts. I'm hoping that's not the case. I'm just looking at things. Dennis, that was actually your original thesis when back at the end of January when we were talking about that. So do we have better protocols? Do we have possible vaccines? Do we know, people are not affected? Do we have things if they're in the hospital to subside it a little bit, a lot of different factors there. But that was just something that that I was thinking about, and the at home versus the lockdown stuff.
I mean, you can look at the action from the last 2 days and say, oh, they don't believe this Pfizer vaccine news, because all of a sudden, we've had a replay of the trade, especially yesterday, selling all the value names and buying all the growth names and buying all, the stay-at-home plays. Like Zoom had a great day yesterday. What I'm going to say, in my opinion, is I do believe that, we're going to get past this. I do believe that we're going to get a vaccine that is going to help tremendously. Is it going to solve COVID? I don't know about that, but I think it's going to be good enough that people will eventually go back to their normal lives. So there is light at the end of the tunnel after Monday. So I look at this, and you look at, for instance, at Darden Restaurants, and I was very vocal saying that move in Darden Restaurants was
crazy,
flat out stupid. Dumb money buying that stock, pure dumb money. It gapped up 25%, tried to make a new all-time high. Come on. Stock is, the company is operating restaurants that nobody wants to go to yet. Way too premature to be making new all-time highs on DRI. But now you look at it. So definitely Monday, if you were buying into that gap thinking, I got to own the value names, you're on the wrong side of the trade. You were chasing. And it was horrible. And there was 22 stocks in the SP 500 that were up more than 20%. There were all these value names. Look at American Airlines. American Airlines, obviously the big pop. Boom. Oh, yeah, this is it. We're out of here. 1440 it. So close at 1146 and gaps up 3 points. Talking about 25% up gap. Came in. Look at it where it's at now. All the way back in 4 days. So if you're so inclined and you had to own airlines on Monday, I would say if you believe that we are actually getting past the COVID, that we're going to get past it, and there is light at the end of the tunnel now thanks to Pfizer. If you believe that, I'm not saying I believe that, but if you believe that, I would say now is the time to strike on an American Airlines. Not when it's up 30% on the gap. It just filled it. It's given you a second chance if you believe that. So I would not be surprised if this rotation does eventually in the next day or two start to rotate back into these names, because now they've come back in. I mean, Boeing, everybody wanted to promote Boeing and, and pump it there, even like we said on Fast Money, they're all pumping it. 191. Yeah, we got to buy Boeing now. Okay. It's 15 points down from where it was 24 hours ago when they were pumping it. I mean, now, okay, we get back towards, Mondays or low 172, 173, 175. That's how you're buying now the pullback here on the stocks that have the new news that potentially we might be getting past this. So look to your reopening plays here now, because we've got a nice pullback now. Buying JP Morgan on Monday up at 117 or 118 or 119. Now it's 113. Okay, it's still a little bit. That one's still a little bit overdone maybe. But Bank of America, you're seeing a little pullback in the banks here. So I think now is the time to maybe start looking at some of these stocks if you're so inclined to do so. I mean, the banks didn't pull back as much as that Darden Restaurants, and American Airlines pulled back because of the offering. But UAL was up at $44. Well, it's 37 here this morning. You're starting the process of, you're almost filling that gap. So now you can control your risk a little bit more, because we know the market was kind of comfortable with these stocks, especially like UAL or American Airlines at 11. Because that's where it was pricing. It was a binary bet almost. Are they going to make it or not? Well, the odds are, if the vaccine is truly coming, that maybe they are going to survive. So now you're getting a shot. So don't chase. Like I said, don't chase. This is not the market to chase in. You're buying Zoom this morning. You're chasing now. And you know what? I think Zoom was a dead cat bounce. I think Zoom 366 to 422. I think this gets up to 440. I think you sell the hell out of it. I think the Zoom all-time high is in. I'm going to say I think the Zoom, not 52-week high. I believe the Zoom 588 all-time high will stand forever. I think it will never. This is my opinion. I think it will never get back up to 588 ever again. Because one, I believe we're going to come out of this, and two, the valuation's just nuts.
Right.
So I think all rallies to be sold. And what a nice rally the last. Now you've got the bounce. You've got the dead cat bounce that you needed to potentially get the hell out of some of these stocks if you're in all these stocks. So I would be reallocating my portfolio, not talking about Apple and Amazon. I said yesterday on the show, I think Amazon's going to 5,000. I do believe that because Amazon wins no matter what.
Why 5,000?
Why not? Why not? 10,000?
I don't know.
3,000. We could go like Marc Yusko and think it's going to go way down.
Yeah.
I personally don't believe that because I believe this company is maybe, I could arguably say, the best company in the world. I like to own the best companies.
What about his saying that they sell other people's things? They really don't sell their own stuff.
Well, that's every retailer. Every retailer. Walmart doesn't make things. They sell other people's things, but Amazon actually does make some stuff.
Yeah,
I mean, Amazon actually,
up.
it's not even a full argument to say that, but every retailer just sells other people's stuff. I mean, eBay just sells other people's stuff. Walmart just sells other people's stuff. I mean, the whole world's built on selling other people's stuff. So you can't all just be manufacturers. So I personally, I think it's a service. It's putting buyer and seller together. Just like it was great. Analysis by Marc Yusko yesterday was just fabulous on all accounts. I don't agree with him on that. I think there's a tech wreck coming. I personally don't think it's for Amazon. I think it's for the Zooms, the Pelotons, the stocks that really, benefited from this, stay-at-home play, because I believe we are going to eventually go back to normal life, and I believe we're going to do that maybe within the next year. So with that belief, it's time to start, in my opinion, start selling your Zooms and your Pelotons and potentially I'm not buying AMC movie theaters, but potentially looking at what companies you think, are really going to benefit here. Am I buying Boeing? Well, I mean, the airlines are still really ground zero, but you know what? You want to take a flyer on American Airlines? Now's the time, man. Because you had the 11 support, you filled the whole gap. On Monday was not the time. 1430 was not the time. Yesterday or 2 days ago, 13, still not the time. Filled the whole gap. Okay, well now you're back to where you were prior to Monday's news. So if you believe that we're closer to the end of this than we were on Sunday, well, then American Airlines give you a second chance.
And just for this American Airlines, it just depends. Remember that June 5th moment that we had? Or was it June 5th or June 8th? This is when I can only illustrate it here on the monthlies, when it had that 22, 23, and you were really convicted on that. That was, I can't remember what happened. Something happened major in June. It was really positive. Was it the first time we started getting some
that may
vaccine news?
No,
what was it?
No, that may have been when they got the federal aid, the bailout, whatever you want to call it. What was the date there? It was here. It was like the first week of June, right?
I thought it was June 8th, but someone's saying June 5th. Maybe the news came out June 4th and June 5th was the trading session. Anyways, it just that looks like the chart to me then, and then it came way down off that. Now it popped again off that high. Here, I give you the date. It was June 5th. But anyways, I just want to illustrate that, the point of what happened. It came all the way back down and then trying to rally again. I tell you, I'll give you a monthly level. I mean, if you're going to trade this super technically,
sure.
I mean, you got all these tops here, I'd be more inclined on the monthly chart. Boy, that comes at like 13, 14. I mean, that's where it got up to yesterday. Maybe you put a buy stop at like, if nibble on some here, and then if it breaks above Monday's high, put some more in. And if you nibble here and it goes down some more, then you still have some ammo. It
all depends on what your thesis is. But if you're loaded up with all stay-at-home stocks, and I got a few of them, I got all the video games, I got a few of them. Now's that time to start considering that barbell approach. I mean, you want to add a few reopening stocks to your portfolio here. You're getting a second chance in a lot of them. I mean, look at Kohl's, because we're going to reopen, and I'm showing you the dogs, and I'm not saying I'm doing this, so don't just jump on and say yeah. But if you're buying Kohl's on Monday or Tuesday, I mean, you bought it up 22 to 27. That's almost a 20% move too. $5 on 22. It's a 20% move. Well, it just came all the way back down. So Nordstrom's not quite all the way back down, but half of it's come back down. Dillard's came all the way back down. DDS. I mean, holy mackerel. Like, if you really think I missed the boat here, now they just gave you all a second chance. And the same thing goes for all of these tech stay-at-home stocks that everybody's been hiding in. If you have too much money in those, I would consider lightening those stocks up this morning. Not tomorrow, this morning.
Just one more thing. When going back to Bill's interview, did you hear him say he prefers the dumbbell approach? It's the stuff that we talk about on the show. Did you catch that little barb that he got in there?
That's a good one.
I'm still laughing from that. I know not everyone enjoyed it, but man, oh man, I'm still cracking up from that interview. All right.
As long as he stays on side.
Let's bring on.
I get nervous sometimes when he gets excited.
Speaking of interviews, let's bring on today's first guest, Marc Chaikin. He's on with us now. He's the founder of Chaikin Analytics. Joins us every other week. Marc, good morning. Are you putting down or picking up what Dennis is putting down?
No. I think
that's why we have a market. I love that. We have to have somebody else on the other side of the trade.
I'm looking for stocks that have already broken out that I would have called reopening trades months ago. Stocks like Tapestry and Capri Holdings in the luxury goods area, stocks like General Motors and Ford that are starting to establish very strong technical patterns. But
that's exactly what, you are on the same trade, Marc. That's the same side. That's a different example.
I just can't buy American Airlines and coal.
Well, I'm giving you the extreme example. If you really believe that we're coming to the light at the end of the tunnel, the people who are buying American Airlines at 14.5, buying up 30% Monday morning, it just filled the whole gap in 3 days.
And I do agree with you that some of these stay-at-home stocks, not the shop-at-home, some of the shop-at-home.
I like the shop-at-home still.
But some of those shop-at-homes have bearish ratings now and look a little bit dicey from a technical point of view. I put together a list of stocks that I would avoid. We're always talking about what would you buy here. Stocks like Netflix, Beyond Meat, Shopify,
all broken.
Spotify, Wayfair, Fastly, and Zoom. I think these are stocks you really have to avoid and look for what you said, bounces to get out where you feel comfortable that you're not selling into a hole. I think
that's right now. That's yesterday, and we've built on that this morning because Zoom up another $6 here this morning. So I mean, if you're in these stocks and you think, I lost a lot of money Monday, I'm getting some back here. I mean, I believe today is the time to lighten those up. I think you're giving you a second chance here today.
I do too, and you have a little chatter about from Osterholm, who's going to be on the COVID board for Joe Biden, and he's saying a 6 to 8 week or 4 to 6 week shutdown would solve all our woes. So the market sees something like that, and I doubt that it's going to happen because we've never had a federal mandate for that. We've had individual states, and we know how fractured and divided the states are. But when you see something like that, then the shop at home gets a little bit of a rebuy risk on mentality. And I don't buy it. I just don't buy it. I mean, Zoom's the cream of the crop. I think Peloton and Nautilus are like business models chasing a new reality. I don't get it.
I just want to clarify, and I'm getting multiple Twitter messages that says I'm way early on the reopening trade, and I just want to say, I'm not making the point that I personally am coming into all these stocks. I said if you are so inclined to believe that we have light at the end of the tunnel, if that is your thesis that we are going to get past this, now is the time to strike. If you are, I'm not saying I believe we're getting past this the next 6 months, so I'm not jumping into American Airlines either. So I love the fact that, you bring up, I'm long Ford. I am long Ford, and I'm heavy long Ford. And because I believe the Ford is going to be a big EV player, and nobody's recognized it yet. I believe you've got a value stock here that eventually, could, they're still firing on all cylinders, and General Motors as well. I think there's a story here that is going to unfold that I believe, I was saying this yesterday, I believe Ford and GM are going to be the biggest EV players in the world.
Makes sense.
I think they are. I think they're going to make the most EV cars in the world.
It's the only rationale for why they're moving this well, because you don't have a whole new cohort of car buyers, especially in this market where used cars are being kept longer and longer. But I have a play. I made it my bullish stock of the week on Sunday. Alliance Data, ADS. They run loyalty programs for big chains like Ulta Beauty and Pottery Barn. And they were starting a turnaround even before the announcement of the vaccine on Monday. It was up 20% at the high on Monday. Coming off a great base, you've still got lots of room to the 52-week highs. This is a company that was really hurt when retail locations, bricks and mortar, were shut down. But they've lopped a lot of money off expenses. They've just made an acquisition in digital payments. And this is the kind of company you have to find. You have to find them as they're coming up through the base. This is sort of an old Wyckoff trade where you've made a base, you break out. Now you want to wait for the pullback. This is another one where you don't want to chase Monday, Tuesday strength, but you get a pullback toward that breakout. And this is a company that beat earnings estimates by 50% in the third quarter after a horrendous first quarter. So I'm looking for stocks like this in addition to the names that we like to talk about, like FedEx and NVIDIA. But let's talk about where the market's going between now and year-end. I mean, that's what everybody should be focusing on.
So, let's talk about that, Marc. So we got the pop on Monday, and as we've been talking about, that rally was sold. However, whether you interpret that as the market saying we don't believe we're out of the woods, or whether you interpret it as the market saying we think it was just too much too fast on Monday, how do you interpret that pop we got and the eventual undoing of it?
Well, I think I can add more to the conversation by telling you what I think is going to happen between now and year end. I think we're going to have a slow melt up to the 3,700 area on the S&P. And the reason I believe that is because volatility is coming down. The big bets that the institutions placed post-election, expecting that there might be what we're in fact getting a little of disputed results, are starting to come off. So when you look at the 10 and 20-day moving average of VIX, it's starting to come down. And what that means is that this $1 trillion or so that adjust their equity allocations based on volatility. When volatility is high, they pull back their allocations. When volatility is low, they take on some leverage and build up their equity exposure. I think that is skewed to the upside between now and year end. And when you add that into the COVID vaccine picture and economic statistics, which have really supported a gradual V-shaped recovery, I think the market is headed higher between now and year end.
So
Marc, go ahead, Dennis. Go ahead.
So obviously you don't want to own the Zooms and you don't want to own the Pelotons, but are you still looking like big tech? Are you looking, what's going to carry us? What stocks are going to carry us to new highs?
I think you got to be very selective, Dennis. I think Google is the best of the mega techs. They had a blowout earnings report. Amazon, I love, just as you do. I still like FedEx. Someone's got to deliver those packages, whether it's the economy reopening and businesses, getting deliveries. And by the way, that habit is not going to change. I am not going to drive out to a Best Buy or a Bed Bath & Beyond to buy something that I can buy on Amazon or on their websites. I'm just not going to do it. And by the way, you find bargains. So I believe Amazon, between AWS, the cloud, and their basic retail operation, is going to grow as you do. I also like NVIDIA because it's in so many areas of growth, like data center, GPU units and artificial intelligence, self-driving cars, and their core gaming business. And I like some solar. I like First Solar. So I think there's a package of about 5 what I would call growth names, which would include Google, NVIDIA, FedEx, First Solar, and Lowe's, and then some of these specialized names like Ford, which is breaking out nicely, and Alliance Data, and and some of these apparel stocks, the luxury apparels, they've gotten ahead of themselves, and the home builders. I mean, that demographic train has left the station. They are buying homes, whether it's a flight from the city or whether it's getting out of their parents' basement.
That is the backbone of really the economy, because that supports so many different things, right? Your Home Depots, your Lowe's, your furniture companies, your mattress companies, a lot of different things. But Marc, I just want to go back real quick. on Monday, and you've worked for some pretty big houses, right? And kind of the way I looked at Monday was this was like, I think the big boys, the big money that get bonuses based on, year-end performance, they see that kind of move and they're like, with this kind of year that we've had, we are booking everything we can. We're booking profits to the end of the year. Market does not like uncertainty. We don't know who the president is a week after an election. We still do not know the full scope of that pandemic. And, maybe a slow melt up. I don't know. I look at that high in stocks. You talk about like that blow off top that lasts for like a long time. And it's hard for me not to look at that Monday price action and say, man, maybe you got a blow off top. You got a lot of uncertainty, and we're going to see what happens in 2021. Take the other side of that one for me, Mark.
Well, I actually like it. I like your idea. And, look who did the buying. It was the machines. The algorithms saw 90% effective vaccine, and they said, get out of growth by reopening or by value, however you put a label on it.
Yeah.
I think those are the stocks that may have had a blow off top, but
Okay.
I don't think that translates to the overall market. So I think you can be, if you believe that's a blow off top, and I agree with you, and the stocks that did go up 20%, like Valero and some of the other names you talked about.
Crazy moves. But
then buy some of the high quality growth stocks. Lowe's is another example. You just mentioned it. NVIDIA, even Adobe. These companies aren't going away, and their business isn't dependent on stay at home, shop at home. So, there are a lot of slices to the growth story that I think are attractive, and they've just given them a haircut. So, one man's blow off top is another man's opportunity in the stocks that they got out of, because they didn't just buy the airlines and the energy stocks. They sold. These are rebalancing of computer run algorithmic portfolios. And the Wall Street traders love to be on the other side of that, as long as they believe it's a 1 or 2 day event.
The moves on Monday are quite possibly the stupidest moves I've ever seen in my entire 21-year trading career. I mean, they sold Clorox down $20 because all of a sudden we're never going to clean again because we got a vaccine. Here's a company that obviously benefited directly from COVID, but, to sell it off 20 points at one time on Monday, and you can see what I'm talking about, closed to 218 and actually went down to 193. So they had it at one point down on Monday, down 25 points. Clorox, consumer staple. I don't think we're going to stop cleaning because all of a sudden, we have some light, and I don't even know how big that light is, but Pfizer gave us.
I thought we were drinking Clorox to.
I knew that was coming. I knew that was coming. Yeah, I knew it. I knew someone was going to say it.
On pullbacks, I'd buy Clorox.
Just came to me.
Hey, just real fast, we're about to get CPI and.
Yeah, Dennis, go wide, man. I don't want to see you get into
wide.
wide for the rest of the show.
All right, wide it is.
Okay.
Yeah, I just wanted to put that out there in case.
Those numbers have been coming
in case I get picked off.
Very benign for the market.
Yeah, no, I agree, Mark. I just want to throw it out there so we don't hear Dennis complain. Oh, you didn't warn me about the number.
God, I'm getting killed here. The algos picked me off.
So I want to be quoted as saying that this market is going to be positive through year end. I like that trade.
Santa Claus rally.
It's worked. It's worked for years. This is the season now. We start ramping up here now into the year end, and I don't see, especially if we're getting through this. I kind of agree with you.
One more question, Mark, before we let you go. They goosed the banks, right, on this, and man, the banking sector. I mean, is everyone just going to be running out and getting loans, and we're going to have higher interest rates, and these banks are going to do better? What do you think about that move? I mean, as a true reopening play, any banks on your radar? Or
well, that's more of an interest rate play. You had the 10-year up near 1%, and there's people who feel that small caps are also reflecting this. That's as much a move based on interest rates, where small caps do better in a rising interest rate environment, typically. But I think it's still early on the banks. They have a great potential in our power gauge rating, but they've been trading so weak technically that they've had neutral ratings. So it's a possibility, but it's definitely based on interest rates, not loan demand. It's the net interest margin that's going to improve if you get rates up.
And we don't want rates up. We don't want rates up with this economy.
Well, that's right. There's your balance. You want to get the market to 4,000 on the S&P. You want rates to stay at 0 so that your valuations don't matter.
All right, just got those numbers. Jobless claims better than expected. CPI unchanged. Nothing really there.
Crickets from a trading
Dennis,
perspective.
go back to making your tight markets.
Go back
All
to
right, guys.
the high frequency trader. HFT stop. Okay, HFT on.
Our next show would be Thanksgiving. What do you want to do, guys?
Oh gosh, I haven't even thought about that. I can't think that far ahead, Mark.
I'm having 47 people over in my house, so I won't be able to do the show.
Everybody's gonna get a test though.
Wait, Joel, are you serious?
No.
I think it violates some state law.
All right.
Oh no. All right, Mark. We'll get you on. We'll get you on before. We got a few openings. We'll send you an email and
that'll be good.
We'll get you on. We really appreciate
for sure. We love Mark.
All right.
All right.
Love you guys. I'm following your Twitter.
You didn't tell him your stop. You didn't tell him
Mark,
your joke of the day.
We've had
Joel told the joke of the day, and it directly involved you, Mark.
Mark, we've been great friends for a long time, right? You've heard a lot of my bad jokes and everything. And when Spencer mentioned your name, I was thinking that you should start a newsletter for marijuana stocks.
And what would it be called?
Bacon with Chaikin.
Bacon with Chaikin.
Actually, someone in the chat had a better riff off that. Maybe like shake and bake.
Shake and bake. That's
will you run that by Sandy and let us know before?
She's a marketer. She'll see the virtue of that. on CNBC 8 years ago when I made the great call on Priceline with John Najarian, John goes on the next day and he said, I got out of my long and I bought some put options on Priceline and I made a fortune. And Scott Wapner said, I guess Chaikin saved your bacon.
Nice. So he's not immune to this bacon, I don't think. I think he's heard this before.
He's a Wall Street veteran, and we're glad to always have him on the show.
What you can do when I come on is just say, what's shaking, Chaikin.
That's a good one, too. Great name.
Love it, guys. Love being on here.
All right, man. Love having you.
All right.
Really a choppy session here. We're all over the map. We were flat when I woke up at 5:45 this morning, and we were just down 20, and now we're down 14. I'd like to see the high of the week or the low of the week on Friday, but man, I don't, a lot of times you see that it's going to be tough to get the high. I think it's going to be tough to get the low. I think you see some chop here, but we'll see if we get some news or some other things to change that.
You want to see the mover of the day? Do you know what the mover of the day is? Spencer will. He's using his filters. He's going to know the mover of the day. Reported earnings.
I know who it is.
Fossil Group? Is that who you're talking about?
No.
Planeteer.
No. All incorrect. It's PDD.
Okay, that was my second guess. That was
Duo.
It's up 22% this morning.
What is that?
Oh, it's one of these Chinese social media plays. I just wanted, before we go into that, I just want to make another reminder to show us the love, hit the like button. We appreciate that. As I mentioned, we'll have Jim Barr, the CEO of Nautilus, on at the top of the hour here. So PDD, as Spinner noted in the Benzinga.com chat, it was the very first time since they became a public company that they actually announced a profitable quarter. 5 cents per share is what they earned last quarter versus a 17-cent loss estimate. Revenue at 2.09 versus $1.86 billion. So a decided beat on the earnings and the revenue for PDD last quarter. I guess we can't forget about China just yet.
I guess that's, that 5 cents a share is worth 24% here, Joel. This is what happens when stocks are hot. They're hot. New all-time highs, stock breaking out. I'm not going to short. I don't short stocks making new all-time highs. I got that rule, but holy macro, what a windfall. If you had this overnight, I don't know what the Strata was expecting, but I'm pretty sure it wasn't expecting a 26-point move.
140 is the pre-market high. That's all I give you. I can't give you anything else in that one. Takes out 140, 141, 142.
I gotta go look at what the straddle was trading for.
Oh,
you know what? There's been a bad quarter for some straddle writers. Like we talk about, but there's been some wicked moves. Like there's been some that have been, just in, and maybe it's the predicted ones. Like they just didn't move that much. I think Tesla didn't move that much on its numbers. And then there's been some like this. They give it though, man. I mean, people pay for these straddles, Joel. Take a guess. What do you think it was going for?
It was where it closed 115 or whatever.
Yeah, so the
117,
weekly straddle.
118.
So tomorrow's expiration 5 plus. I'm
15,
looking at just where the close
no,
is.
10
more, $14.
Wow,
they pay for these things. I mean, it's 26, so you're doing okay. But holy cow, you got to pay if you want to participate on the straddle side of it. I mean, I guess he could have just bought calls. He could have bought the 115 calls for $10 or $9. So you had to pay. But you are making money. The other one, I believe JD reported too, did it not, Spencer?
I didn't.
JD report or is it just up because it's China?
I did not see JD. No, JD's up. I mean, JD is part of the Singles Day thing. Like they're also e-commerce in China. So
well, JD's up $5, 5%. So it's a big move. I mean, Alibaba's not up really much. I mean, China's all ripping. So maybe it's PDD. I thought there was a headline on JD too. So,
earnings are 4 days from now on Monday.
4 days from now. I'm jumping the gun here on JD, but they are loving PDD. So they love JD too, and they love all the China stocks because they have PDD.
Don't miss out Baba now. Baba's been being hit.
I told you I would have been buying Baba. I said yesterday I'd be buying Baba. It hasn't gone that far yet. So I like the Baba. I did sell some of my Fubo, Mitch, while we got you on there. I sold half. I wish I would have sold it all right near the opening, obviously.
I mean, come on.
And it's come down. Couldn't hold. Mitch did. He said, "Get all out." I had to hold a little piece. I held a third. You told me to hold. I could. Mitch said, "I'm allowing you to hold a third." I actually only held 20% of the position.
Why do we hold the third? Because we play with the house money.
That's true, actually. I believe playing with the house's money on this one now. So I could just leave it out there and I can never lose on those shares that I have left if I just don't look at it. But I still like the story here. So, but filling the gap is not good news. I mean, so if you're coming in, you're like, ugh. I mean, the same thing happened with that here one. Could bounce. So you come back to these levels, maybe it bounces here. But FUBO wasn't good. That didn't hold on to the gains. So, next.
PDD was one move, and I also mentioned Fossil because they're up 25% this morning. They had earnings. I guess people are buying a lot more watches. So the earnings, the estimate was just way off here on FOSL. 31 cents per share versus a 73-cent loss estimate. Sales are 435.
They made money?
Yeah, they made money.
Oh, that's pretty good. And a lot of these retailers have done really well.
Yeah.
Considering
which stock was that? I'm sorry, lost my train of thought there.
Fossil Group.
Oh, Fossil.
Yeah.
Can I tell my Fossil story?
Yes.
When it made its all-time high.
When was this?
It was when Bubba Watson was wearing that pink Fossil when he won the Masters
in 2013.
And the Masters, do you know they teed off at like 7:30 this morning? Because they got to get it in before the, because of the dark and everything. Yeah, the Masters is this weekend.
Wow.
Little tangent.
So, yeah.
So get long, whoever.
Bubba Watson, $132. It goes to show you once again that when stocks start getting talked about by everyone, and that day everybody was talking about Fossil because they were all talking about Bubba. And that day is obviously, that's when you want to be selling. When everybody is talking about your stock, that is the time to be nervous.
All right. S&P's only down 11 1/4 here at 35, 56, 75, just about mid-range on the session. So the bulls and the bears are a little bit confused here.
I'm confused. It's a confusing market. Let's go GrowGeneration from last night, GRWG. A lot of people like to trade the pot stocks. We've done 2 pot jokes here. Let's talk a pot stock.
This was a good one here. So the EPS beat by a penny. The sales also beat 55 versus $47 million, but they also gave good sales. They actually raised their sales guidance for the year. They raised it by $15 million from a low end of $170 million to a low end of $185 million. Again, that's the sales guidance for the year. They raised their sales guidance for next year as well by $35 million from the mid 200 range to the high $200 million range.
Today is a very important day. You want to see this thing build on this morning's gains, and you want to see it challenge that high from 3 days ago. If it gives back these gains, story is cooling off significantly. I mean, this has run a lot. Back in March, this was $2. It's 22. So it has, a lot of fluff in there. I do like the US pot plays more than the Canadian ones, because the Canadian ones all had their day and that day is long gone. So like I said, I'm a seller of all rallies and pot stocks, went in the Canadian from the Canadian ones, which worked again, by the way. I mean, 2 days ago, 3 days ago, they all had to buy pot stocks. They were buying them, up, regardless. ACB went all the way up to $14.50. 2-for-1 stock split 3 days later, 7.5, Joel. Just amazing how quickly they give back the gains, and just shows you how many people are caught. Nobody caught in GRWG. So you don't have that like pain trade where, oh, please give me my money back. You have a lot of people caught. You have people caught from a couple days ago, but there's not like these Canadian pot stocks that everybody's just, destroyed in them. So that's the good news. The bad news is it's had a long run, and I don't know if I have bad news. I'm going to say the jury is out here. So we need to see a build and challenge the highs from 3 days ago. If it gives back the gains, then there's problems.
You couldn't quite get to that all-time high on the pop. It gave it a nice try. Pre-market high comes in just under $24. That comes in at $23.87. But I think what my focus would be on this issue for today, since we've already backed off and where we at, 22.50. You had your all-time closing high at 23.04. That was on the 5th. And then you kissed it. You had 22.98. So that's 2 closes in the $23 area. That just kind of, I think that's where someone wants to get out of perhaps a large position, and they work around it. They missed it when it went up to 24.30. Then they missed it. So I just look at it that. And I'd like to see this get up, make a new all-time closing high today, and then challenge that 24.80. But that, not a super great 4-star number, but I'd be keeping an eye on 23 in GrowGeneration.
I want to go to the chat. There are some tickers I've been writing down throughout the morning.
Let's go. Ticker time.
Somebody asked us.
Starting early. Whoa.
That's all right. We'll do a few more today.
Someone asked us about Amazon. I don't know if they were talking about a trade or an investment, and I didn't get clarity on that. But they asked at the top of the hour what you would do with Amazon here.
I own it.
Yeah,
I think it's eventually going to 5,000. I'd buy all pullbacks. If you have it on for a trade and you bought it, is this a snapback rally for sure? 3,200 will run into trouble. So if we start to get up 3,170, 3,180, you're going to see it stall out. It's been in a trading range. It's kind of in the middle of the trading range at 3,200. I would expect it to stall out short term at 3,200. So for a trade, I'd be selling in the upper 3,175, 3,180. As a long-term investment, I'm holding.
I'll pass on Amazon.
That's fine.
Okay, that's allowed. What about Peloton here? So we're going to have the CEO of one of their main competitors, Nautilus, on in about 15 minutes or so. Let's look at Peloton.
Nautilus coming on our show?
Man, I swear, you never listen to me.
No, I'm bad. I'm a bad listener. My wife says the same thing.
Yes, the CEO of Nautilus, Jim Barr.
That's awesome.
The honors
are awesome.
in 15 minutes.
I'm excited for that interview.
Pay attention.
He was out a few years.
I better not. Maybe. I don't know if I should participate in this interview because I think the Nautilus story just ended 4 days ago. But again, I believe the Pfizer vaccine has light at the end of the tunnel. I think rallies, or stick with Peloton. I think rallies and Peloton are to be sold.
I think the CEO will try to change their mind. But anyway, back to Peloton. We'll do Peloton now. We'll do Nautilus at 9. Joel, thoughts on PTON?
I wanted to sell it a couple days ago, but
the boss won't let him.
Yeah, hold it. Yeah, she did. Her response was buy more, and I'm glad I didn't do that. I don't know. I just, when the stocks have this kind of run, and then they give it back. Also, the other thing I didn't like, I explained to her, they, great earnings, and they crushed it that day on earnings. So I think eventually, I had a great 40-minute workout on it yesterday. I like it. When I can get back into the pool on a daily basis, then I'll be doing it. But I just, these kind of runs, I don't know. Once they turn, and I really feel like this one turned.
Is the story cooled off, or is the story broken? That is the question. We know it's cooled off because obviously the stock has come down. But is the story now broken because we have the Pfizer vaccine. That's the question. I personally believe that this is a broken story.
I'd say 3 highs in one area is pretty significant.
I think it broke on Monday. I think the story is now broken.
3 highs in the same area. 0848, 0865, and 0735. So, man, oh man. I mean, I could say 108, 109. Let's just say 110. I said, because there was some lows at that area on the way down, and it got a nice pop. So people are stuck from that area. You got people stuck from this, and then you got a little pop. And if you didn't get out, then you're really stuck. I just think it's just starting to really build up some overhead supply.
There's actually not, if it got above the 109 though, then you get in the gap, and then you could say, okay, there could be a trade up to 120 here. So even, you know, if you have a bearish thesis, sometimes you can find. So if this was to get up over 109, 110, and try and hold it, like not just like spike up there at the open and then tank. If it would get up to 109, 110 and hold above that 108.5, then there is room to 120. I would like sell. If it gets 120, I'm selling short. I will say that right now.
Fill that gap,
if Peloton gets back up to 120, 121, I will sell it short. I'm not selling it short right here because there's too much, you know, there's still people that love this.
If it filled that gap,
and it's sitting here. It wants to go one way or another. So, I mean, you could short it off these 3 highs, but what do we say? There's no such thing as triple top. I wouldn't be surprised if it gets in the gap area just to like,
just to mess with
people. Just to mess with the people that think, you know, the story's broken. I think it is broken, but it could, I'd like, so I'm not putting the short on here at 106. I'd like Peloton to rally and fill that gap and then get the chance to short. I'm sure Joel is going to really be trying to talk to Lisa if it gets back to 120.
If it gets back to that area.
I might just sell it without her permission.
And you know what? There's also no, because when we turn the portfolio over to the girls, or you know, well, I don't know if I'll be around for that. You're
going to be around forever. You're so healthy.
Yes, I try and be. The other thing, I saw an advertisement for this mirror. And, you know, that Lululemon product. So if everyone that buys Lululemons goes to, you know, buys that mirror product, I don't know. Competition coming on down the line, too. I don't know. I rather sell than buy. Next. Too long on Peloton.
Yeah, Joel and I talking about stocks that he owns. All right. What about
Rocket? We got to talk about Rocket.
Sure.
Rocket. Everyone wants to talk about Rocket.
Man.
Did you observe much of a Mad Money pop last night, Dan?
Yeah, we did. We got the initial pop and it couldn't hold that either. So it's funny. This stock, I own this stock in my long-term portfolio. I shorted it on the pop in earnings because I know how bloody hated it is. And I was like, even though they beat and the earnings report was awesome, it doesn't matter because they hate the stock. I think eventually they find a reason to like this stock. I think it's going to take like a conviction. Obviously, it might even take more than Kramer because Kramer really pumped the tires last night on it too.
Again. He did that before.
Yeah, again. It's going to take somebody big to come in and say, you know, like not saying Warren Buffett to buy it, but somebody like not maybe it doesn't have to be that big, but somebody's got to give this a vote of confidence. It needs something to turn the sentiment because right now every rally gets faded. I own it. I believe in the long-term story. I think there's value here. I mean, you know, I don't know if it was CEO. Was the CEO on Mad Money last night or was it, I don't know. Was it the CEO?
Yep.
Yeah. So CEO was on Mad Money last night. And he was saying, you know, they're talking about like buybacks and they're saying, you know, they believe that their company is undervalued. I think it might be too.
Buying back stock this after an IPO, is that common?
That's what they were talking about. I don't know if that was officially announced, but they were talking.
Yeah.
No, it did. $1 billion. Yeah, they did.
Yeah.
$1 billion buyback.
What if you think about the like? Is a loan and housing environment going to get any better than it is now?
That's the argument. That's a great point. And is this as good as it gets? You know, you would argue for, you know, if interest rates start going up here, does that, you know, change the thesis here where, okay, well, people, you know, are just giddy to just go buy, you know, their new homes and moving around and doing all this, interest rates start to go up. I mean, you know, some of these companies can win no matter what.
That could be hard.
I think that's the argument here against it. But, you know, I like the story still. I'm long the stock. I'm in from 24, so I bought way too high. I bought it after the big pullback. Well, we know I played it once, so I actually, if I add it all up, I'm probably doing okay on it still because I played it from like 20 to 27, and then I rebought my shares that I sold at like 24, and I screwed that up. Obviously, I bought way too soon. Should have waited until the dust settled, and the dust settled back at 18. I mean, if you're coming in here now, there's an opportunity, but there's so much pain. Everybody's stuck in this thing, so it's gonna have a hard it's not just gonna rip itself up to like 25 or 30. Too many people are stuck, too much overhead supply. Even this, though I like the story and I like the fundamentals, it's tough chart.
You got in the pre-market, in the pre-market yesterday, it bolted over 22, got to 20, just over 22. But yesterday during the regular session, only got to 21.71, and then your two previous highs are 22.29 and 22.41. So a lot of resistance in that 22 handle. Great support on the downside. That first day it ticked 17.50, came down to 18 and change, came down to 18 again. So if you're looking at it like this is it, this is not going to undercut the IPO low. Hey, you're buying in 21 here. Your stops at 17. You see what happens. But definitely calm down after this run was a little bit of a Kramer pump the first time. And now the Kramer pump this time is not having as much of an effect.
It was on a while ago, and it got a pump too, and then it got faded.
Huge.
I mean, there's been a couple Kramer pumps in here, and sometimes they really move the stocks, and sometimes they fade them. So Jim Cramer is very influential. Love him or hate him, when he gets on board on something, I think about Plug Power. He pumps Plug Power so much, and even last night again. Pumping it again. He says, I wish it would pull back a little bit so I could, get on board on this, again, it's run here and now. But you got to watch when he really gets convicted about something, he will pump it for, sometimes months. He's been a full month talking about Plug Power every other day. The CEO has been on this show like 3 times. So in the last couple months, he loves this story and he is driving this. The driver for Plug Power has been Jim Cramer. It really has, because you think about the retail following, you think about, how many people watch CNBC to get their trading ideas, and he's on there just pumping Plug Power continuously. So when they first get on board on something, you got to be very careful to saying, okay, this is the Kramer pump and it's going to fade. I mean, sometimes, if he continues to pump it and pump it and pump it, they can really move the stocks.
When did we have the Plug Power CEO?
I just looked it up, Joel. It was July 8th. Was when
we had him on at the perfect time. That was
the CEO. Well, no, we didn't.
It's a great story. It's been moving, but what's the all-time high in Plug Power? People don't realize this. What's the all-time high Plug Power?
This stock's been around for like a million years.
I traded this when I first started at Bray Trading, so this has been a story for a long time. It didn't just come out.
156, I think.
Joel's gonna go try to grab it.
156.
Might be higher than that. Show the charts, Joel.
I am. I can only do so many things at once.
Come on.
Oh, well, my chart says higher than that. My chart says
bubble
375.
375.
Okay.
Show Ballard Power, BLDP. That's
you always go that one. You always do that one.
They trade together. I pair trade these all the time. We go way back. The Ballard Power's had an incredible run here in the last year or two, but this was the story back in 2000. Same story. So these charts are very similar. You go back 2001 is like $90.
Yep.
Yeah. So, and it's 16. So, I mean, if you bought these when the buzz back in 2001, you're still, down a lot of money. But, it's been a good story for everybody who's bought in the last year. So, good story. They're continuing to be pumped. I mean, maybe this is the future, but I don't know about that. They thought it was the future in 2001.
All right. Joe, what was that?
Let's do SPAC earning. The SPAC trade. HYLN.
Oh God, do we
the
have
Hillian report?
I mean, yeah, the report yesterday. I don't think the report was very good. I saw that their losses widened. Let me see what the number is here. They lost 48 cents per share. I don't even have a revenue print for them. Let me see.
Yeah, because they don't have any.
No, of course they have revenue. It'll be insane. I don't have any good numbers here. So I apologize, but.
21. Someone stepped up at 21 to pre-market. That's all I can tell you about this one.
All right, we're going to have the CEO, as I mentioned, of Nautilus on the show in about 5 minutes. Looking ahead to some earnings after the close today, there are 3 big names on my radar: Cisco, Palantir, and Disney.
I thought Palantir was out.
No, it's tonight, and I had it on last night. I put this on I was actually going to put it on yesterday morning, and I didn't. I put it on overnight. I've sold it already because it got the 40-cent pop. I actually sold it last night because it was popping up 40-50 cents last night, and obviously we're down. I mean, the stock's going to run into the earning. I wouldn't be surprised if this runs even farther into the earnings. again, you're chasing, it's had your classic earnings run up. This was, been running for 5 days ahead of the report. So now it's got some good news baked in. So it's a coin flip on, what it does after the report. But everybody, this stock is trading so much, Joel. It's trading at like 6 o'clock at night, like it's still open. It's that liquid. It's like a 2-cent markets, and it's trading with huge size active. This has got to be one of the most traded stocks right now, this PLTR, ever since it broke out over 11. Classic breakout trade working very well here, 11 to 16. The question is, now you're coming in, okay, well, now it's up 50% in 5 days ahead of the report. That sets up that I would ring the register before it reports, because even if they beat, there's a little bit of good news baked in here.
Actually, I know it was traded actively because when I was on the Peloton, I was watching CNBC, and like the trades were just like bing, 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 bing,
So
bing.
active.
Yeah, I could see it. I see it was trading a lot. Last night it got up near $17. If you're looking for a potential target in this one, if you want to exit, 17.06 is your pre-market high. It was actually an after-hours high. Currently trading 16.43.
What else? Disney. Let's look at Disney here. Disney reports tonight.
Dennis
I'm long
Rand.
it, and I'm unhappily long it, because I bought this just yesterday because I was like, okay, they should give it the a little bit of life here today. It's not getting any life here this morning because the reopening trade is off this morning again. If that trade reverses after 10 o'clock, which I think it might, then Disney might start to show some life. I still wouldn't be surprised if it shows a little bit of life in the report. I wouldn't be long this anything more than a trade, though, for the simple reason is I don't understand the valuation here. I don't understand how it's worth as much as it was last year. Disney Plus isn't worth that much, and all the parks are closed. I mean, there is life. So maybe the Pfizer vaccine, if you got down, if they disappoint, and it's down that 120, 125 area, would I take a flyer on Disney now? Maybe. I always wanted to own Disney. I just couldn't bring myself to do when the parks are closed. But the Pfizer vaccine does change things. So I'm hoping for it to fill the gap after the earnings so I can actually buy for my long-term.
Yeah, I mean, I think of all the stocks that you look at, and you look at the price action, and the circumstances that we've had, I think this one has to be the newest one. I mean, or like the most surprising price action of anything. If there's
it's held up so well.
Yeah, exactly.
They all of a sudden made it a stay-at-home stock. It was actually moving with the stay-at-home stocks for a bit, which is unbelievable because of Disney Plus. I mean, and on Disney Plus, just a fraction of the revenue of their overall company. We know the parks is 40%, and the parks are, California's still closed, and got obviously Orlando. But eventually, if we're getting past it, I mean, I could listen to the argument now if we really believe in the Pfizer vaccine, and I don't think the earnings are going to be that great. If they decide for whatever reason to slaughter, I'm not saying they're going to. I don't know what they're going to do. I'd be a buyer in the 120 area. So if it was to come down to there, I think it's safe enough now where I would actually buy Disney if it got down to 120. It's 136 though. I don't know what it's going to do on the earnings. And like I said, I own it right now for an overnight trade, but I will sell it before the report.
Yeah, Dennis, it's worth mentioning that Disneyland is closed, but all the other parks are open. I mean, they're not fully open, but at least they're open.
China, but what's a capacity? Like I heard Disney Orlando's like flying at like 15% capacity or something, 20%. Like right. Really, if you ever want to go to Disney World, it must be an awesome experience right now.
Oh, you don't have to
lines.
Wait. Yeah,
you don't have to wait for nothing. You just go on that that Peter Pan ride, which is like a 2-hour wait all the time because every kid wants to ride the Peter Pan ride. My kid would want to ride it too. Probably just go on that thing like 25 times, bang, bang, bang it out. I bet you right now. I don't know. Maybe it's not set up like that, but these parks running out a fraction of capacity here. It's probably an awesome experience right now.
What about the ESPN unit too? I mean, they are.
That's so small now, really, for it though. I mean, it's diminished and diminished as a portion of their revenues. I think the Disney Plus over counters ESPN, so I could get talked into Disney for the simple. Here's my thought process on Disney, like longer term, not at 136. I want it to disappoint so I can actually buy it, but I could get talked into it for the simple reason that if we get past COVID. And we feel safe. If everybody feels safe again, maybe because of vaccine, everybody's going to go on vacation. You're going to see, all of a sudden, everybody's been cooped up. They're all wanting to go somewhere, and if we can make the vaccine good enough that we actually feel safe, I think there's going to be like a run for every vacation, for cruise lines, for doing all kinds of things that we haven't done, kind of like, I mean, wouldn't you want to, if you had a vaccine that you were 100% confident feels safe, wouldn't you go on a vacation right now?
Lisa's on it.
Like, there's people save money, they spend money on their homes. People want to do stuff. People want to go see places. I would love to take my kids to Disney World.
I want to go to our guest, but real fast, just to put a bow on that, Brent Slava from our news desk who's listening just chimed in, said he went to Cedar Point, I guess, a few weekends ago, and it was packed. So take that for whatever it's worth.
How's that work?
I don't know.
Well, we better go buy some fun.
All right.
There's an inside scoop.
I thought they're supposed to have limited capacity.
How is it packed?
That's what he said, and he was there, and I wasn't. So, well, what do I know? All right, I'm bringing on our guest here, Jim Barr, as I've been mentioning throughout the hour. He's the CEO of Nautilus, joining us now. Let me see. Yeah, we got his video, we got his audio. Jim, good morning. I know it's early for you, so I appreciate the time. How's it going?
It's going well, thank you. Announced earnings this week, and record earnings, best most profitable quarter in our 40-year history. So very good. Maybe bad timing. We're uplifted by the announcement of progress on the vaccine, but obviously those two things happening the same day didn't help our stock too much.
Yeah, so I want to ask you sort of about. You guys have had a pretty strange year. So last year was no secret a pretty bad year for you guys. You came on this year, and then you had this turnaround plan in place, and then this pandemic hits. So that obviously drove a lot of demand for your products. But I'm wondering how much of the turnaround in sales this year is a result of processes that were already being put in place in the winter versus the pandemic that just screwed everybody's supply chains up.
Yeah, for sure. I mean, in the end, I came here because this is a great company with fantastic brands, broad portfolio of different types of products at different price points. We go to market on the channel, so you can buy our products either retail or directly from us. And so I thought we had, kind of the right raw materials to win, but obviously we had missed some trends in the market. We had missed connected fitness. We had a decent digital experience, but it wasn't on any of our products. So we had to accelerate that through the portfolio, come up with some new products that were more winning products. We had some hero products at the company where like our Max Trainer that just ran up our revenue for years and years, and then suddenly you don't have a replacement for that. And one of the reasons was it's just not digital enough, and we missed connected fitness. And then we kept doing kind of the same thing over and over and over. So when I came in, I definitely put in some operational improvements. So that's number one is, we were doing 2/3 TV in our advertising, 1/3 digital, flip that the other way, take different approaches to our messaging, segment our audience instead of just going after people who we're trying to get off the couch. Ironically, the hardest group to go after, we're going after more. So it's a combination of those operational details at the beginning. Then, of course, there is for sure a pandemic effect that I'm happy to talk about. I think there's a new normal, and there's going to be a permanency to some of the trends we've seen. And then we're getting our long-term strategic plan in place. We're rolling that out actually starting today at the company. So we're very excited about that long-term prospect.
Well, actually, that leads in. Dennis, go ahead.
No, so I'm sorry. We're getting crossed up.
Go ahead, Dennis.
Dennis Dick here. I just wanted to just jump a little bit further. You were talking about the new normalcy, and I'm just wondering, how do you project something because obviously you've got, a big bump from people staying at home, but some of this is going to stick. You're right. Some of this has got to stick because some people are like, oh, I like working from home or working out from home. I like, just not having to go drive to the gym and waste, 20 minutes driving there, 20 minutes driving back. I can just go, jump on my home equipment here, get my workout in, shower, and save myself 45 minutes. I mean, so some of this probably does stick. How do you project, how much is going to stick and how much is, obviously not going to stick?
Well, there's a lot of surveys out there. I don't have one from the last few days, but from as late as last week, we talk to our customers and we survey non-customers as well, and we ask them mostly about their attitudes about going to the gym, right? Because you have this $40 billion gym membership market that is blending in with our relatively smaller, historically $3.6 billion at-home fitness market. And, any amount of blend there is gonna help us. But in terms of trying to figure out what's permanent, what isn't, some of the things we're hearing is, depending on our survey, between 12 and 30% of gym goers say they will never go back. Now, this was before this week. And I never really believed the high end of that. So let's just say it's, 10%, but there's some amount that will never go back. So you got to call that permanent, right?
Yep.
And then in addition to that, you've got the rest of people telling us, look, I'll go back when there's a vaccine, when it's fully available, when lots of people have it. And when I go back, I'm going to balance the gym and home in a different proportion, much like we are all doing with office and home. It's probably not going back to 5 days a week for quite some time. It might be work from home, 2 days a week and work from the office 3 days a week. But it's the same type of thing with the gym. We don't think people are going to pick either or. We think they're going to continue to do that. In the meantime, we've tried to do things like, introduce our brands to new customers that would have never seen us, take advantage of that effect for as long as it's there in permanent ways. Things like, we created 7 times the number of new customers in the last quarter versus the year ago period. So when you introduce your brands and your products to new people, they really see that. And you mentioned, just the convenience of working out from home. We've all kind of known it, but through the pandemic, there's been a lot of forced trial in a lot of different ways. And we say, hey, it's actually very convenient to do that. And we think they're going to balance that differently. And the other effect we saw is people are really still afraid to be, if God forbid there's another virus or resurgence of this one, do you have everything you need at home to be able to do that? Because people got caught without what they wanted this time. So they're, what's temporary, what's permanent, I'm not sure, but we see some very long-term good signs for our business. And even I'll add retailers' own growth transformations as they, switch to more e-commerce and they switch to curbside pickup and things like that. That really does help a company like Nautilus, who has generally been restricted in those stores like Dick's Sporting Goods and Best Buy and others, to what fits on the floor and certain price points, generally nothing above 1,500. So we're kind of released from that, and we're getting lots of traction with retailers that never sold fitness before, which is fantastic.
Jim, I want to ask about how you guys how Nautilus moves product, right? Because you've got the direct to consumer and you've got the retail business. And of course you've got the gym business, right? So, and the growth rates there are varying a lot. So can you speak to the different growth rates for those different business lines and where the focus is now?
Sure. Well, we report in 2 segments, the direct business and the retail business. So retail had, I think the number was 108% growth quarter over quarter, third quarter this year versus last year. And it was its best quarter ever. We've been growing that business, getting more retailers on board. And so that's a very, very healthy and business. And we're very pleased with that. And then our direct business, which, has the, kind of the great elements of, converting to cash quicker. We can change promotions on a dime. We can send out emails. We can market very rapidly. We kind of control more things, and that was that had well over 200% growth in the last quarter. So those are both growing strong. We're getting international growth as well. We sold our commercial business. As part of our strategic planning, focus is a big part of strategy for me, and we decided to go at home only instead of at home and commercial. So we sold that commercial business October 14th.
I want to ask about the new bike you guys just launched a couple months ago, the Velocore. Perfect for people like Dennis who want to exercise, but who also have ADD and can't focus, because you can also connect it to other apps, right? Netflix and Amazon Prime and Hulu, right? So you can actually like stream stuff, not just classes in connected fitness classes, but also just like other streaming apps, right?
Absolutely. So we think we have a real winner here. Obviously, this company's had a lot of innovation over the years. The Velocore bike is the very first unstationary bike that can lean from side to side, and it's it's differentiated, obviously, and it's great innovation, but it's also got some great benefits. You get a better core workout and arm workout, so you're actually you're working a bigger portion of your body than a traditional stationary bike. So that's fantastic. And that immersive experience that you talked about, we provide through our digital membership platform that we call Journey. And Journey has, as you said, we've got trainer-led videos. We don't do live training. Our customers tell us a lot of the other companies may be over-indexed on live, but on-demand videos are great. But that's not even really what the core of Journey is. It's you get on and you get an adaptive workout. Every time you get on, based on what you did last time, based on your goals, you get a different workout selected just for you from our AI-driven algorithm. And then we give you personal coaching along with it. And you can also, as you mentioned, watch Netflix in the background while being coached. So you can do both those things at the same time. And then we have what some of the others have as well, which is immersive experiences to, run in Tiananmen Square or bike in the Swiss Alps. And obviously it has music and things like that. So yeah, the combination of the differentiated product and the great connected fitness experience is really exceeded our expectations. We're very excited about it. We think it not only gives us a great product, but it's one of those things we want our brand to stand for. We want it to be a more tech forward brand than it's been in the past. And we're quite proud of Velocore, and it's doing very well.
Jim, I'm curious, when you look around the industry and look at your peers, you see companies like Peloton with a $30 billion valuation and Mirror, which sold for $500 million. Do you see this, is it like a zero-sum game, or is the growth of those companies just increasing the size of the overall pie for everybody in fitness?
Yeah, I think, those valuations are fantastic. We're probably a little over 1x revenue right now. So when I see Mirror being sold for 5x, and when you look at the tremendous Peloton valuation as well, there's definitely upside, we believe, as part of this. And as I said, I think there's permanent structural impacts to the at-home fitness market that we're all going to enjoy. Of course, there's going to be more competition every day. I see some new company I've never heard of on my social feed that makes a bike, so it's you definitely have that in. But it could be that our addressable market, just the at-home fitness, may double in just the 1 year. It's really just Peloton and us as public companies that you can see the stats for. But we think there's a definite permanent wave here.
And you said you're not going to be giving too much guidance going forward, though you did give some in the most recent quarter. And you also spoke to just the lack of seasonality. I think everyone is experiencing that this year. In a normal year, though, what kind of seasonality is there in your business?
Yeah, I mean, in a normal year, fourth quarter is our biggest one, Christmas holiday, things like that. First quarter is generally our second. It's either first or third. Third has kind of the retail load-ins, and first quarter has, the New Year's resolution crowd there that's jumping in on that. And generally after January, the seasonality, we get a drop as people have bought what they need. This year, we never saw that. We launched a couple of connected fitness bikes, including the Bowflex C6 last October, the first Bowflex bike that we've ever made. And that went, kind of a great value proposition relative to Peloton, where it was less than half the price. You could use our digital software, or you could use Peloton's if you want, or Zwift, or any that you wanted. So that open platform plus price point really made a big difference. We never saw any seasonality, and we were already having a great first quarter, and it turned into a fantastic first quarter with the last 2 weeks when the pandemic hit. But we were already not seeing the seasonality.
We're on the line with Jim Barr. He's the CEO of Nautilus. First of all, Jim, I want to say, man, congratulations on selling that commercial business in October. I mean, holy moly. I mean, you think about these Planet Fitnesses or the companies that you sold to. I mean, they got stuff, and how much more are they going to be ordering? So what was the impetus for that? Obviously you didn't see a pandemic coming down the road, but what was the thought process behind that?
Yeah, I mean, as we did our it's a great question. As we did our strategy, I felt like we were not as focused as we needed to be, right? We had, let's say we have treadmills in Nautilus brand, in Bowflex brand, in Schwinn brand. I thought we were confusing people with our portfolio. So our brands weren't clear. They didn't have clear roles. I think we were over skewed. And then in this instance, we were, taking our resources and spreading them across at home and the club business. And we had to make some choices, and that was one of the choices we made. It's a fantastic business. It's just, it's not the business for us right now. It's going to be better in someone else's hands. But those are the tough strategic choices of deciding what not to do.
And then just a final question from me. Your customer base. What percent of your customer base is people, new customers, like buying this, versus people that had something and it's a little old and they're replacing it? Because when I look at these things like this Peloton that I have, I'm going to keep this for a long time. I don't know if I'm going to be going out and buying some equipment. The equipment that I had before that, an old bike and in a treadmill for 20 years. So are you always having to go out and get new customers, or are you having people like, upgrading and getting something new?
Yeah, I mean, a lot of that has to do with how your product portfolio is progressing. So if you've got some good innovation in the portfolio, then you're going to get some repeat. Interestingly, when we look at our customer segments, actually it's generational what the attitudes about repurchase are. If you're maybe 50 and above, you sort of think, I've made my last purchase, or I'm unlikely to buy a whole lot more. But when you talk to millennials, they're like, oh yeah, I'm going to use this for a few years, then I'm going to get something else. And what we've seen studying gym goers that have been displaced is they really want variety. So they are trying different things. Most of the time people buy a tread first, but bikes have been really crazy lately. And then people want ellipticals, and we have a Max Trainer, which is, that stand-up elliptical that gives you a great workout in a short amount of time. And but combined with the digital experience, I think that's really it. And the way we think about it, it's a great question, is we used to be able to just differentiate based on bending steel and molding plastic, but we're going to differentiate on the whole experience, which spans, the physical equipment, the content that's in our membership platform, and comes in a software wrapper. So I happen to own a Tesla, and the day you buy a Tesla is, most cars, the day you buy, it's the best day. What I love about this model of connected fitness is your equipment can get better as you get software updates, and that's what we plan to do.
Our CEO who's in the chat, you're his new, he's your new biggest fan for that comment, I think, because he's all about the connectivity and the same underlying theme of Tesla. Just it relates back to your business. Jim Barr is the CEO of Nautilus. Jim, like I said, I know it's early for you on the West Coast. We appreciate you getting up with us this morning. Thank you very much.
Great talking to you. Thanks, guys.
All right. I hope you guys enjoyed that. If you did, hit the like button. If you didn't, hit the like button anyway. I don't really care. Hit the like button. That helps us out with YouTube. And we appreciate that. We appreciate all the comments in our chats, the comments that are on topic, the ones that are off topic. It's fine. They're all good. Hit the like button. Hit the subscribe button. We appreciate all the participation from everyone. And thanks to our guests today, Jim Barr and Marc Chaikin. That'll be a wrap for us here. Bitcoin sold off 1,600, but is now back above that level. So we'll be watching that today. Everyone, you can catch a replay of this show on our podcast or on every major podcast platform, or of course on YouTube. You can always email us with questions, comments, or concerns. PreMarket@benzinga.com. That goes to all three of us here. And please remember that all the information from our show is meant to be used as informational purposes, not for investing or trading or even fitness advice. Everyone have a good rest of your day. We'll talk to you later.